discussing with our guest senator, JP Morgan's Adrian Moat, about where the Indian economy is in terms of picking up. Is the capex cycle showing any signs of turning? To answer that question, we have with us Mr. JP Chalasani, Managing Director and Group CEO at Punj Lloyd. Over to you, Adrian.
Hi JP, thank you very much for being on the show. I suppose when we look at the capex story, there's two parts to it. There are legacy orders which may be caught up in issues such as environmental clearance, and then there's the new order flow. Can you give us an indication of how the industry in aggregate is dealing with some of the legacy issues?
Yeah, I think as you rightly said that there are legacy issues and there are issues with respect to what's going to happen currently in the future orders in terms of the infrastructure sector on this. Legacy issues, yes, there has been an attempt to address the issues by the government in a number of areas, whether it's called power or the roads and various things on this. I don't say we reached an end of resolving the issues, but at least there is a recognition that there are a set of issues to be resolved, and then there is an attempt towards trying to resolve these issues. In my opinion, it will still take some time to resolve the issues because if you look at the legacy issues, there are the four players: the government and the government agencies. That's one side. You have the banks, and you have the developers, and you have the construction contractors on this. All four, especially the first three, other than the construction contractors on this, did have their own the do's or don'ts because of which we got into this mess of legacy issues on this. Each one of them are realized, but my only worry is that having realized a set of issues that we are actually tending to become overcautious in some of the areas. That's actually hurting moving ahead in future. On the fresh ones, not leaving aside the legacy issues, I think if you look at the power sector, there are still quite a few issues to be resolved. Unless we do that, it's not going to pick up. But I'm seeing traction in road sector and urban transport infrastructure and a few other areas. Definitely the traction. It might take a few more months, a few more quarters before we really see the good traction, but at least we're moving in the right direction.
We've been talking quite a lot about where interest rates are in India, particularly real rates when you have negative WPI. Do you think the price of money is one reason why you're seeing a very muted capex cycle for the private sector?
Definitely. Not just the price of money, and I think it's also the issue. One major issue is the price of money for moving ahead on this. If you look at the financing cost for most of the infrastructure companies has become much more than EBITDA margin, so then everybody is in a sort of a negative profits in terms of that. But not just the price of money and how do you evaluate the projects and start funding. I think we went from one end of the spectrum where we started funding projects which didn't have any fundamentals to other end of the spectrum where banks and everybody else has become overcautious, and it's taking much longer time to really actually finance the projects.
Okay. So if we look for the broader sort of engineering construction industry globally, we've seen very dramatic declines in energy and commodity prices, and then that's having a knock-on effect for the engineering construction industry, particularly in places like the Middle East where the fiscal challenges for those governments are building. Are you concerned about this as a trend, and do you think it will have a knock-on effect in terms of making the engineering construction sector focus more domestically?
I think some of the areas we are slowly seeing the impact on slowing down, mainly in the oil and gas sector, because of the crude prices and things like that. We are seeing the cut down on the capex globally on this. But the other side of it, if you look at the process industry or the other areas, are still picking up. And one of the advantages we're seeing clearly is that because the commodity prices are being at what they are today on this, the contracts which we are executing, we are seeing a significant improvement in our margins because the procurement prices have come down significantly on this. So your overall top line might come down, but your margins are improving because the commodity prices are low. But in oil and as Punj Lloyd, we're only seeing in oil and gas industry there's a slowdown, but other infrastructure areas globally are still picking up, especially the infrastructure segment, including in the Middle East. There's a huge pickup.
Okay. So if we look at the fiscal priorities for the government, which is sort of road, rail and defence, how do you think your company is positioned to take advantage of those?
As I said, that the rail, the road segment is what in India, especially if you see, there's a huge traction on this, and there are a number of bits which have come up and then which are likely to come up in the next 45 days to this thing on this. And we're talking about 4.5 lakh crore orders out in the market in the next couple of years on this. That's there, and the urban infrastructure, the metros, is other area which we're seeing a big traction on this. But then I think one of the issues what most of the construction, engineering and construction companies are facing today is in terms of banks supporting these companies to move ahead in terms of picking up the large projects. Therefore, even if you have a large opportunities out there, unless the banking sector starts looking at the construction industry different from an infrastructure, a development in infrastructure business, I think you will see that a limitation, at least in Indian construction companies, a limitation towards how many projects can really pick up and how many projects can really complete on time. I think I'm seeing that as one of the issues today.
All right, so we'll have to leave it